Good evening or good morning, good whatever time it is you are listening to this. I'm going to be going over the SPY for March 10th, well, the week of March 10th, and I'll be going over the data sets and the earnings, which, hint, hint, there's not a lot of earnings. But going ahead with that, let's go ahead and jump straight into the data. Now, we have a kind of interesting week because we don't have a whole ton of data, but we have very important data for the few bits of data we do have. So let me make sure I am capturing the screen correctly. Okay, perfect. All right, so Monday, tomorrow, we don't have very much of anything. We only have the New York Fed consumer inflation expectations. I don't really care about that. I don't think the market's gonna care about that too much. The only reason why the market's gonna care about that really is because we don't have any other data that day. So if they are going to move the market off of that data, then that's why. But does anybody really care what the New York Fed consumer inflation expectations are? Not really. Um, it doesn't really do much for the market other than just rally or dump the market for a day or so. Tuesday we have the JOLTS data at 10 a.m. That's just the JOLTS job data. Not really expecting anything crazy out of that, but if we do see something pretty big out of that, then that's a different story. But for right this second, um, I do know that the Fed is changing their stance on what they're trying to look at, and they are trying to look at the job data a little more in detail. So just take that with a grain of salt. I don't know where I'm going with that yet. Just that the job data is far more important now. So the JOLTS data could be something big, it could be something small. We really don't know until we see it, but generally the JOLTS data doesn't do a whole lot. Uh, that's what I'm trying to say. Now, we do have the 3-year note auction same day at 1 a.m. or 1 p.m. Now, the yields have been coming down slightly. I don't know if that's going to stick or not. We have the tariffs for Mexico and Canada being paused until I believe April 2nd. So we'll see how the yields react to that. The 3-year yield is a shorter term yield, so we'll see kind of the rest of the week based on what the 3-year gives us. Now, on Wednesday, it's a very big day. We have all the CPI data. Um, I'm expecting the CPI to actually tick upward slightly. I know a lot of the consensus right here is forecasting downward, but seeing how the job data has been increasingly picking up, and just seeing how inflation has been, I don't want to say heading towards stagflation, but um, things have been more inflationary as of recent. Now, I don't know if that's just a slight bump in the data or if that's something more on the grander scheme, but we'll see as we get more data sets. But overall, I am expecting a slight uptick or, to hold consensus of what we had last um, reading. I'm not expecting it to come in cooler, but it can. We will see. If it comes in cooler, then obviously the market's gonna rally pretty hard. If it comes in hotter, then the market's probably going to continue the sell-off. We will see. Um, yeah, that's kind of the big day this week is Wednesday. Now, we did have the PPI last week give us a really big move, and that's what's coming out on Thursday, as well as the jobless claims. Now, again, the jobless claims, excuse me, the jobless claims come out or our weekly data set. So, um, we'll kind of see what they give us this week. They have been uh, this page is responding. Don't tell me that. Um, we've been seeing a slight uptick in the jobless claims, which was kind of the original thesis that I had going into the year. But with the jobless or with the jobs data picking up slightly, I am kind of expecting the jobless claims to start pulling downward slightly, but we'll see. There's a really good thesis of why we will see the jobless claims um, continue to pick upward. compared to go downward. Now, the core PPI, that was the big data set last week, or not last week, but when we had the really big CPI reading, last month, we saw the market not move so much on the CPI reading, but they moved really, really hard on the PPI reading. Um, I'm not really expecting that, but it could happen if we see the PPI go up again. Sorry, this thing keeps popping up. If we see the PPI go upward again, then obviously the market might see that as a signal to continue selling offward. But most likely we're going to see that come in within expectation of the 0.3%. Um, I did skip this, but on Wednesday we do have the 10-year no auction. That's a really important one. Very likely, as I said, we're going to see the yield pull down slightly, but the 3-year earlier in the week will tell us a lot more about that. Then we have the 30-year auction on Thursday. So Thursday's a really big day. Wednesday's a really big day. I'm expecting Wednesday to be bigger than Thursday. I think the PPI last time was just kind of a shock to the market rather than um, something that they anticipated since we did see some of the shorter term data pulling upward. Um, then Friday, we just basically, sorry, this keeps popping up. Friday, we basically just have the Michigan um, inflation data. Uh, it doesn't do a whole lot for the market. It can go upward or downward. It really doesn't do a whole lot. If we get some crazy reading, then obviously the market will move off that, but very likely it's going to be basing the movement off of the CPI and PPI from Wednesday and Thursday rather than using any of Friday's data because it really doesn't have, that much of an impact. Now, quickly going over earnings this week, it's a very boring week overall. There's only two earnings I'm going to mention, which is Oracle on Monday and the after hours. That's going to be an important one because tech is pretty um, earnings based right now. So if Oracle has a good earning, that could be good for, the majority of tech. And then Wednesday we have Adobe, which um, overall that it's a big company, right? I mean, it's not one of the most important techs, but it is a very big tech. Um, within the circle of tech companies anyway. So, um, Adobe does have some weight. I don't expect it to really drive the market one way or another, but those are the two earnings I am looking forward to. Other than that, there's really nothing that great. I mean, there is QBTS, which, yeah, I don't really care about playing that one that much. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. With that said, though, let's go ahead and jump into the technical analysis. Now, as always, let's go over the daily moving averages and the Bollinger. And let's zoom in. Alright, so, excuse me, I keep losing my voice. The 5 mile, which is the 5 moving average, I call them all. The 5 mile is currently at 578.46. It's very likely going to open around the 576.70 since we closed at 575.92. We have the 10 mile at 585.75, so still quite far above us. The 20 mile is at 596.30, so way far above us. As you can see, I mean it's good $20 above us right now. The upper Bollinger is really out of the picture. It's a whole $40 above us right now. And then the lower Bollinger is kind of right where we're at right now, which is the 571.30. And then another really important level, which we did hit on Friday, is the 200 mile. Now, we don't talk about the 200 mall very often because it usually only comes around for a very short period for once a year. Uh, Very likely that's going to be this short period for the year. Excuse me. But that's at 569.54. This 200 mall can take days to test. It's not like a standard moving average where like the 5 mall. Generally, we'll test that in like a single session. The 200 mall could take even a week sometimes to fully test, so we might be pulled underneath the 200 mall the entire week. Just be prepared for that. Uh, either anytime we get to the 200 mall, and let me just really highlight this for a moment. I want to hide the Bollingers for a second. Anytime we get to the 200 mall, we bounce like really, really, really hard for the most part. 200 mile bounce, 200 mile bounce. This is an extended area under the 200 mile, but this was back during the COVID time. And, 200 mile bounce, 200 mile bounce. Generally, the SPY won't be trading uh, below the 200 mile for a very extended period of time. Usually it takes a pretty dramatic event to cause the SPY to sit at that level for such a significant time. We had that large sell-off in 2022, which, that was a whole bear market. And that's what you're looking at right here, basically, is whether we're in a bull market or bear market. And that's really what the 200 mall signifies. So while we're above the 200 mall for this entire rally, for the most part, that's showing a strong bull market. Now, if we start trading in the area below, so if we start trading in, oh geez, all my lines. But if we start trading in, you know, start heading down to that area, for example, um, that would be the bull or the bear market. We don't want to see that unless, of course you're bearish and you want to see the market dump, but most of us don't. Um, and with that said, the 200 MA is generally a bounce area. So if the data this week is good for the market, if the CPI comes in lower, if the PPI comes in lower, very likely we will bounce out of this area and start, recuperating some of this lost weight up in this, up in the moving averages. Or if we have, you know, bad data that suggests stagflation or something else, then we're right in an area where we can start, continuing to sell off and really entering a bear market. Now, this sell-off isn't something that's standard, and we're going to go over the Bollingers for a second because I just want to highlight how unusual it is for this to be this extended. Now, not looking at this one, but we're going to go over just a few bottom Bollinger moves, and I'm going to show you the difference of how absurd this one is compared to the majority. Now, here's a bottom Bollinger move. It was there for 3 days, for 3 sessions, so it entered first session, traded during it the second session, left it the third session. This was in the bottom Bollinger for 2 sessions. This was in for, looks like a total of 5 sessions. It was just slightly extended. 2 sessions. It's hard to say if it's full 5 sessions or not, but I'm gonna just, for the sake of things, say that's a 5 session move. There's a 2 session move right there. 2 session move. There's 4 sessions right there. But it really looks like they were just retesting some liquidity right there for that fourth day. There's a 2-day move, 2-day move, 2-day, 5 mod, 2-day. Might be a full 4-day move. We'll just say it is. So if you could just, you can see how unusual it is to get this many sessions pulling this far above or below the bottom Bollinger. It's not standard at all. It's extremely rare. I actually haven't seen this happen in years, As I've mentioned the other day, I mean, the previous time we saw something like this was, yeah, that's at the beginning of that 2022 sell-off. And even then, it wasn't as bad. You weren't trading under the bottom Bollinger for as many sessions. Let's take a look at COVID really quick. This is almost comparable to the COVID sell-off. And even though the dollar range is far different, just remember we're dealing with trillions of dollars up at the 500, 600 level. Not that they weren't dealing with that much money at this level either, but um, the SPY has nearly doubled in price since this area. So the amount of sell-off can be quite significant compared to what we had back then for liquidity. Now, again, this is the COVID sell-off. This is them shutting down the world for the most part. Um, yeah, this is a very, 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 very large sell-off. Um, we just need to kind of follow where it goes. It's not standard to see this. Uh, that's one thing we do know. It's not standard to trade under the 200 mile for very long. That's another thing we know. Uh, both of those are even though it's a extremely bearish territory, those are bullish signals because those are both suggesting a bounce. We also have the ADL, which the daily ADL is the money inflow and outflow. So we have the ADL kind of chopping in this area, and it's been doing that for a few weeks now. And what that's telling me is that there's not just selling, there's buying and selling. So this is a controlled sell-off. And what that means is that I don't think that this is going to dig for some crazy absurd crash type sell. I don't think that's going to happen. If that is, then, very likely we are going to see some support retested before we pull down too much further. And I just want to go over a couple of the gaps really quick on the daily. Um, to signify this, hold on. So we had that first gap at that 565.60 range. And that made this inverse cup right here. And I'm not going to show it on the daily chart because my other channels are going to obscure the vision on it right now, and not really interested in that. But the next gap down, if the market does continue to start pushing down, is at the 563.37. And I believe that's right at that mark. We're not too far from that, but we are currently a full like $5, $6 above that. So it's not totally unreasonable if the dealers want to go for that level, but I do think that we have started to get the reversal in this area. Now, I want to go over the hourly really quick and just want to cover a really important area. Now, we are forming an inverse head and shoulders here, and just to show you this consolidation channel so that you don't think it's just some arbitrary line. This has been holding us through the whole Trump rally of since he was elected until now. And now we're starting to follow this major selling channel. We've broken down through the consolidation channel. Now the selling channel is pretty strong. It's technically been carrying us through the whole election process as well, or through the whole Trump rally as well. And it's very likely that we're going to see a bounce here. And what we're looking for is we're looking for the inverse head and shoulders to start forming. And what that's going to really look like is they're going to start taking, nope, I did not want a trend line. I wanted to draw. They're going to start taking more liquidity up here. Okay. We want to see them build above this lower consolidation channel because if they do build above that area, then what that means is that it's very likely going to stay within the channel and bounce back upward. I don't know the time period or anything, but that's what happens with these consolidation channels. You generally bounce to the top to the bottom throughout the channel. So if we can reclaim this channel, then we'll continue to start seeing, the bouncing up, down, up, down, up, down. Uh, I'm looking for the push above that 576 level. It's really, really important that we get that. Now going over this on the hourly just a little bit, we do have this inverse head and shoulders, and we do have multiple cups here that can close. And I'm mainly going to be talking about the bullish thesis here because while there is room down, there's not a whole heck of a lot, as I stated earlier. Um, Now, let's see. So we have this inverse head and shoulders, and between this area, I don't have it marked right now, but there's a liquidity gap between, oh geez, it's between the 570 and or the 570.10 and the 580.19. Okay, so that's going to be right in that area right there. If you can see on my screen, I'll just put a trend line to mark it. Um, that's going to be that area essentially. So what we're looking for is for either, sorry, I don't want all these lines showing. I'm gonna delete the inverse head and shoulders for a second just so I can show you better what I do want to see here. Now, either we're gonna break down and you're gonna see having things popping up on my screen. Hold on. Okay, either we're gonna break down here and you're going to see, some sort of inverse head and shoulders, or not head and shoulders, inverse cup and handle start forming here. And, the way we know that is that we have that gap down to the 565. So there's an inverse cup that they can take there very easily if they do want to continue heading downward. Since we don't have support underneath us, we don't have really anything to look forward to underneath us. All we can do is look towards the next gap and what structures are forming. So currently I don't see that bearish structure forming too much because again, we should be seeing this 4 or this 570 range. And we're still very well within that, and on the top end of that range, we're going to be seeing in there. So what I am looking forward to is we have a cup filled right here, and this got filled the entire trading session on Friday. I don't know why my cup does that. Okay, but what I want to see form here is some sort of handle to break outward. And what this handle could look like, it could look like a cup, it could look like an inverse head and shoulders, so it could look like something like that. But we want to see some sort of structure to pull us above this line and start building liquidity above that. And currently I'm seeing a lot of good structures. We have a lot of cups that can form. We have this cup from there. We have the cup all the way to that 585 level. So just be looking for where the structure is going. And another thing we can look forward to probably during this Monday, Tuesday session this week is we can look at the VIX. And then that's the measure of volatility, and what that truly means is that the VIX moves up if there's put contracts written on the S&P, excuse me, on the S&P 500, and then it will move downward if there's calls written on the S&P. So if we're seeing the VIX move downward and start getting pushed downward, compared to the high values it had last week, then we can start assuming that, hey, we're going to break away from the selling and start heading upward and closing some of these upward gaps. But if we start seeing the VIX really picking up and ramping up more, then very likely they're going to continue trying to push this downward. Uh, anyway, this was a really long video, so I'm gonna end it here, but there is one other note I wanted to show, is that we did break this major buying channel right in that area. And this major buying channel has been carrying us all the way since 2023, when the rally originally started. So that's kind of concerning. I'm not sure if we're gonna have to expand this channel or if this is truly entirely broken and we're gonna see this break down even further. It's kind of to be determined. We need to see how deep the selling goes. It shouldn't last too much longer, and just by historical backing, it really shouldn't last too much longer. These type of sells don't last this long, and I don't expect this one to be any different. Anyway, with that said, I hope everyone has a great week this week. Trade safe. Make sure you're hedging positions so you don't blame me if you lose. With that said, I hope you have a great week and a great trading day. See you in the next one.